just about everybody. Yeah, it looks like they've all joined in.
Okay, well, welcome everyone to Gallo Company's first live noon coffee chat on Fridays. We're planning to do. Eric and I are planning to do these for the next 8 to 10 weeks, and I'd like to introduce Eric Ma, one of the senior associates and CPAs at Gallo Company, and myself, John Gallo, from the firm. Anything we need to know first, Eric, before we start?
Yeah, just a couple things. For those of you guys tuned in, I've muted everybody just to reduce the amount of noise and feedback that comes through. This is an interactive guest meeting, so if you do have any questions, feel free to ask them. We just ask that you use the raise hand function. We'll try to get to them as quickly as possible and whenever we can. So feel free to do that whenever. The other thing is, if we know that not everybody has access to a microphone and people may not want to actually speak in front of everyone else. So feel free to type it to us. All your questions are directly to us so no one else can see them. And yeah, hope we have a really great session. The last thing is, this is a recorded session. So if you feel uncomfortable with being on camera, you can close your cameras.
Okay, great. I think we still have some people in the waiting area, and we'll continue to add people from the waiting area as we start. So happy Easter. Hope everyone has a blessed weekend and start their Easter activities. So Eric, a lot has changed in the last few weeks. A lot of federal government and provincial government announcements. I know a lot of you people on today have been asking us questions, and we thought it would be really good maybe to go over the top 4 or 5 things and get into the details. And if you have any specific questions, please ask them, like Eric had mentioned, on the chat box. So I think the first thing we've been hearing a lot about, Eric, is the wage subsidy.
Yeah.
2 big announcements around wage subsidy. The first one being, which is law, the 10% wage subsidy that is active now and on payroll after March 18th. Some of the key things about the wage subsidy was initially designed for smaller corporations. And when we say smaller, we mean corporations with retained earnings under 15 million. Well, there's a technical term, but 15 million is a good thumb mark for retained earnings. So if you have less than $15 million of retained earnings inside your corporation, you can use the 10% wage subsidy. Any comments on that, Eric?
No, not really. The 10% is something that has just come out, and everybody's going into it. The other thing is, how does the 75% play into that? Because that 75% is starting to, lots of people are starting to talk about it, but it's not quite released. How's that going to play with the 10%?
Yeah, great question. I think first we need to say that Parliament is coming back to work tomorrow morning to pass a 75% wage subsidy law. However, I think we got a really good idea of what they're going to pass. So certainly we've advised everyone to take the 10%, and when the wage subsidy is approved on Saturday, it will offset the 10%. So if you apply or not remitted the 10% of your last payroll, and then you apply for the 75%, CRA, the Government of Canada, will send you back the difference. But the difference between the 75% and the 10% wage subsidy, besides just the numbers, is that the 10% that you can actually do right now is you reduce your remittances by 10%. And there's some calculations that you have to do. We have an Excel spreadsheet on our website for those calculations if you have any questions of exactly how to do them. Eric's the fellow who's actually reviewing all the Excel spreadsheets for clients so that the Excel is done correctly and the remittance is done correctly. But on the 75%, what is a little different is some sort of website is going to be produced by the federal government. Mr. Trudeau said it'll be out in about 3 weeks. You'll fill it out, and then in about 3 to 4 weeks after that, the federal government will be sending you a check or automatically deposited into your account. And one of the points on that is that if you don't have a My Account with CRA, you need to get that. If you're one of our clients and you need information, please email us and we'll make sure you get registered for My Account. One of the interesting things about the 75%, it's available to all corporations, whether you're a foreign entity or a Canadian-controlled private entity or even a public company. The criteria is widely encompassed, and we saw that with some really big media announcements this week with Air Canada and WestJet. Both brought back employees for which they have no real work for, but they're subsidizing their wage with that 75%.
Yeah, definitely. I think one of the other things that's very interesting is how they're actually calculating the revenue. The revenue piece was initially said to be the 30% drop in March, April, May of the previous calendar year. But then in this year, but they updated recently to incorporate companies that may not have had the greatest 2019 year. So now they're also including the 2 months average for January and February as your average to calculate the 30% drop. However, that's different from March because it basically said that COVID didn't really take into full swing all the way through March. So it's actually a 15% drop in March.
Yeah, that was one of the, I think, some of the media that came out this week. And, you know, I think in an environment like this, there's always a lot of fast moving information. So it's not a critique of any of the media, but everyone initially thought it was a 15% drop in revenue. You're good. Well, it's only 15% for the month of March.
That's right.
So that threshold will have to be tested each and every pay period. I think one of the great things too is with this January, February calculation is if you're a new corporation, you just started, you don't have a year of filings, you can qualify, which is great because we don't want to see a lot of our new upstart companies fail because they didn't have a filing year prior to March 18th.
Yeah, definitely. One of the other big things that they talked about this year was also the small business loan for $40,000.
Mm-hmm.
It's interesting how that's going to play. Do you have any comments on how that might work with?
Yeah, before I start talking, we talk about the small business loan. If you have any questions on the wage subsidy, please put it in the chat box. And as I talk about the $40,000, we can maybe address some of those wage subsidy questions. With the $40,000 business loan, there is a couple prerequisites. One of the biggest things, of course, is they want you to have payroll, or it's limited to companies who have payroll between $50,000 and $1 million. And now Eric, that payroll threshold was based on your 2019 T4 filings. So if you're a corporation or an unincorporated entity, it's also open to partnerships and trusts. So any really legal entity that's paying payroll, you have to make sure that the box 19 on the cumulative T4 for the corporation is between $50,000 and $1 million.
That's right, yeah. So we actually do have a question here. I'll read it out loud. So it says, I've had difficulty accessing the self-employed benefit. I lease space to therapists who are independent contractors and they have all qualified. I've lost my rental revenue and I've lost my income as a working therapist. I was told to apply April 8th, which I did, but was advised I was not eligible until the next period. We shut down with the recommendation of our association in mid-March and as directed by the government at the end of March. Any suggestions?
Yes, great question. I think in your situation, certainly if you're not issuing any T4s, the wage subsidies aren't, you're not eligible for them. What you might be referring to is what we call the CERB, the Canadian Emergency Relief Benefit for people who have lost their income for the period. What you might have been talking about when not being recommended is certainly the CERB requires you to have no income in the period in which you apply for. So if you had any income, and we're going to get to some more details on the CERB in a minute, but certainly one of the critiques of the CERB was that if you had some income, but it was below the $2,000, technically you're not eligible. And I think the government and Mr. Trudeau and the finance minister have recognized this, and I think they're going to correct that. And most likely what we're going to see, as we've seen with all the legislation, it's retroactive back to March 15th or March 18th. So I think right now for that comment is you're correct. There's no wage subsidy to assist you on if you had no T4 income. And if you had partial income in the first period of the CERB period, you won't be eligible for the CERB. Also, yesterday was the opening of going back to the business loan, the $40,000 small business loan. If you didn't have that payroll criteria, you also wouldn't qualify for that payroll for that loan.
40,000.
The 40,000, yes.
Yeah. So we have another question. It says, are commission employees eligible for the 75% subsidy?
Yeah, great question. Yes. So if you're now with the payroll subsidies, I think we have to be careful if we're stepping into employment law, provincial employment law. I'll assume most of the people here are in Alberta, so I won't talk about employment law because I'm not a lawyer. But if you're paying that person based on your employment contract, whether it's commission or regular pay, yes, it will all qualify for the 75%. The things where the 75% doesn't qualify is some of the other payments you might make, like a parking payment or some other those employment expenses. But regular pay, whether it's commission or hourly or salary pay, will all qualify for the 75%. And on that, and I just before this meeting, I was on a chat group with some individuals, and they were talking about should I pay commission? And the question around that. Well, if you don't pay the commission, you can't get the subsidy. The question around paying commission is as really goes back to your employment contract with your employee, I think.
That's right, for sure. The next question we have is it too soon to bring back employees? And when do you think we should bring them back?
That's a great question. We're in a very hard economic situation, and our employees are our friends, our family members, our community members. And I'm going to be really honest, from my opinion as a business owner and an accountant, you need to make sure that the business is viable. So I know we got some really great news from Air Canada and WestJet, but my recommendation, I'm going to say it just straight out there, if there's no business purpose to having the employee at work and employed, you need, to keep your powder dry. You need to make sure that the company is viable. And I think if you bring back employees and you're using the wage subsidy, but you have no other revenue, and you're depleting cash, you have to make sure there's a business purpose to it. When I say you have to, you ought to. There's no requirement in the law, but you need to. And there's a lot of smarter people out there than myself, Eric. But I think this is going to last a long time. And from a business perspective, you need to keep the treasury full of cash, or as much as possible, anyways. The people that are working are providing value to the organization, and quite frankly, preparing for it to come out of this downturn, whenever that may be. So whether it's too soon to take them back, I would say at a bare minimum, let's see what the legislation says on Saturday. I think if you're calling people up today and bringing them back without knowing the details of the legislation, that is definitely too soon. Once we know on Saturday, we get to digest it over the Easter weekend. You can see whether it makes sense on Monday to make those phone calls and bring those employees back. But I would recommend you need to think about a few things. Business viability. What's your cash stores? What are they going to do in the business? And are they preparing you for the rebound? And if those answers are no, then I think you need to think hard. And I'm not saying there isn't a human element here, but you got to think about the long game. And right now, oftentimes we'll talk midterm in a business cycle, maybe 12, 18 months. I think midterm right now is what does September and October look like, and the actions you do today need to make sure that you're in the right position in September and October to come out of this. Because my thoughts are, if we get any decrease in the social distancing stuff in late spring, early summer, we're not going to see economic activity start to really kind of pick back up till the fall. And you have to ask yourself, where's your position, or where's your business position this fall to succeed into next winter?
Yeah, definitely. There's a couple questions I think we can touch on all at the same time here. So one of the questions is, does a holding company qualify? And the other question is regarding how the 75% wage subsidy, eligibility is quantified. So I guess for the first question, a holding company, does it qualify? I guess the assumption would be that the holding company is owning an operating company. Now, one of the big rules with the 75% wage subsidy eligibility is whether or not the small business deduction is, whether you have the small business deduction on that holding company. So any company that doesn't qualify for that small business deduction doesn't actually get that qualification. So in an associated group, you couldn't necessarily share across the whole, take that benefit all the way across. Not for the wage subsidy, the subsidy. This is for the $40,000 loan. They don't want to, basically they don't want you to take it from multiple different pockets all at the same time. Basically one person gets one benefit, essentially. The second question was about the...
So I have a question about the holding company.
Yeah.
The term holding company isn't actually a legal definition. So if we're talking about a company that holds shares in an operating company, but there is payroll in a holding company, because individuals in that holding company are doing work like managing their investments. If there's T4 in that company, it would qualify for the wage subsidies. Now, in most of our experience, and I'm looking at the person who asked that question, in most of our experience, those holding companies generally have the owners taking T4 wages from them. There are some provisions in the wage subsidy around related persons. And I think we're going to see more clarification on related persons and the wage subsidy. But it is clear, if the related person is defined by the owners of the company or their family members or immediate blood or by marriage, we're taking T4 wage prior to March 15, then they will be considered eligible for the 75% wage subsidy. So that answer, it would be yes.
Perfect. The other one was, so for the April and May 2020, do we need to compare April and May 2019, or can we compare it to the average of January and February 2020? So for the whole subsidy, there's 3 periods that we're talking about. We're talking about March, April, and May. So there's 2 different methods that you can choose to determine your revenue drop. So if we look at March, that's a 15% drop. You can either elect to use January or the average of January and February 2020 to determine your drop, or you can use March of the previous calendar year. That's the option that they provide. So hopefully that helps. That'll help new business, like you mentioned before, and also businesses who didn't have a strong 2019 year and may have some like picked up in the 2020 year. So it's going to help these people still be able to qualify for that revenue drop, but not, like, I guess, penalize them.
And because there's 2 different options, can you bounce back and forth between your metrics, or do you have to be consistent in your measurements?
That's a really good question. Yeah, so in some months people might feel like they're doing better, but once you choose a method, you have to stick to it for all 3 periods that are currently in place right now. So if you choose to use the average of the first 2 months of 2020, you have to continue to use that methodology. And
did you read anything about, I heard on the news they were talking about you can use accrual or cash-based accounting.
Yeah, that's true. That is the same thing as the months. You have to stick to one, accrual or cash basis, depending on what your financial principle is currently. So you can't bounce between the 2 to reflect whatever's better for that month.
Okay. And just for if you don't know what the difference between cash and accrual accounting is you can either measure your revenues by the cash you've taken into your bank account or by the invoices you've issued. But whatever methodology you choose, you have to be consistent for all the periods. And presumably, if this goes on for a while, for the periods they have yet to define, so for July, August, September. So if we have some professionals listening in, like lawyers, the difference between invoicing or collections, and certainly for some businesses out there, the difference between invoicing and the cash you collect right now is very, very different. You're servicing your clients, and you're issuing the invoices, but you certainly know you won't be collecting for a while. So we'd have to look at that for your specific business, what methodology you'd want to use. But I would think for those that are servicing other businesses, so they're not going business to consumer, but business to business, and they know they got to continue servicing those clients, but those clients have significant cash struggles, you might want to use the cash system because you're not going to get paid for a while.
Yeah. So there's actually quite a few questions, and we'd love to get to them all. Let's go through.
I saw on one of the chats while you're going through, Eric, something about does this apply in other jurisdictions like British Columbia? Yes. All these measures we're talking about right now are federal, and they apply across the country. I also saw a question about this revenue. Does it include if I have sales outside of Canada? And have you read anything on that?
Actually, yeah, it does include sales that are outside of Canada. The income is also included as well. So it is not just limited to what you've earned in Canada. It's what the corporation has earned.
So for some of you out there, if you are doing work in the U.S. and you're invoicing in U.S. dollars, our exchange rate has dropped, and that might inflate your revenue. So you may choose to use the cash methodology.
Yeah. So then I guess on the topic of revenue, one of the things is, what about, I guess, intercompany revenues or non-arm's length revenues between companies? How does that kind of play into the whole like revenue drop?
Would you mean between companies
Yes,
or
between
within?
companies.
Okay. And what have you read about that?
So I think it's about things like, like management fees and choosing how does that affect your revenues? Because presumably what people could say is that they might, not charge a management fee this year, and it may actually make the revenue drop significantly this year. But I believe what I've read is that they will not include those revenues in your initial calculation. Obviously that depends on everybody's situation specifically, but for the most part, that's what I've read.
Yeah, I think it goes into, in this country we're notorious for making a bunch of complicated tax laws. And I think the Prime Minister said it best probably I think maybe 10 days ago, when he said, "Don't abuse the rules. We're going to be super generous. We're going to push these rules through." And certainly people in our profession could probably drive a lot of buses through some of these rules. But we're not here to find the loopholes. We're here to keep business going. So, and this isn't written in law, but if you're operating in the same sort of way you're operating pre-March 18th and you're not changing anything, most likely nothing will be deemed abusive, and you'll be able to fall into these programs, and you'll be fine. We've also heard that the penalties might be as much as 250% of the subsidy that you got, or I believe 5 to 7 years in jail. So the government is saying, listen, we're going to be very generous with these subsidies because we want the economy to survive, but please don't abuse them.
Perfect. So another question we have here: I've changed my operating entity from a corporation to a partnership. Can I still get the 40K? The employment wages paid in 2019 would allow me to qualify, but they were paid by the previous corporation.
Yeah, that's a great question. The qualification for the $40,000 business loan is based on the 2019 T4 income specific to that corporation. So there's a payroll account number that you would use to look at that. So in that case, no, because they're two different legal entities, and the payroll account numbers are different.
And I think in this case, the new January, February 2020 wage calculation is actually beneficial to this person specifically, because although they would not qualify with, like you said, because they're two different legal entities, it might be useful for them with this new option B to calculate currently.
And I don't know that case specifically, but I could think of a potential where the previous entity, the partnership, if it's still in existence and there's still a payroll account and it qualified in 2019, you most likely could get the loan in that legal entity, in the partnership, and potentially use it to assist with the corporation. Now that might be a little gray. We might want to call up CRA to make sure they're okay with that. But the way the rules are right now, we certainly could draw that $40,000 loan out of the partnership account, their payroll account, receive those funds, and then you could loan it to the corporation to continue operating. And I think the spirit of the law, and most likely the technical aspects of the law would be just fine on that one.
Yeah.
I did see a question, and I've had it sent to me personally in emails from other individuals. They said, we're just shy of the $50,000 threshold for the loan, but if I include my income in that loan or in that calculation, we qualify. Now, what I'm confused about when you say your income, is that because you're taking a dividend or not? The rules around the $40,000 loan are very specific. It's $50,000 to $1 million. If you're above it or below it, you do not qualify. So if you're referring to T5 income, it's certainly not in the provision. I think we'll have some amendments to the small business loan, and we may see those amendments come in. But currently, it's very specific to the box 19 on the employment income of the corporation.
Yeah, so on a couple, I think I saw another question.
Well, maybe how about as you read through some of those questions, maybe I'll jump into the CERB and talk to people about the CERB. which is the Canadian Emergency Benefits, which is we've been talking a lot about corporations, and this is probably a good segue into what's out there for individuals. So the CERB, which came live on Monday, for people born in or have birthdays in January, February, March, and then Tuesday for the second quarter birthdays, Wednesday for third quarter birthdays, and Thursday for fourth quarter birthdays. And now it's open for anyone born anytime throughout the year. So the CERB provides $2,000 a month, which is taxable, but they're going to take no remittances. On payment, you'll have to report that income in your 2020 personal tax return. Presumably, you'll be issued some sort of slip by the Canada Revenue Agency sometime in the winter of 2021. So the CERB is available for anyone who has lost employment as a result of COVID-19, taking care of a loved one, they can't work, or they have to stay home because of the children. So if you've lost your income, you have no other sources of income, you could apply for the CERB and you'll get your $2,000. And what we've heard is it's being paid out. People were paid yesterday, so on Thursday for if they applied on Monday. So it's coming very quickly to people, and you get it for each 4-week period. It's available for, I believe, 16 weeks.
Sorry, I was just reading some good questions.
Yeah, 16 weeks, and pretty much it's available to everyone. And there's been some iterations. Initially, when it first came out, company owners that were being issued ineligible dividends from their corporations as a method of earning income were not eligible. That changed, and even individuals that were taking income from their corporations and were issued to them in the 2019 year do qualify for that. The qualification above and beyond losing the income, you had to earn at least $5,000 of income in the 2019 year and or worked at least 14 days consecutively over the 30 days prior to registering for the CERB. So that opens up to a lot of people, and that's the intention. Get the government in, get the money into the economy, get people, paying their rent, putting food on their tables, dealing with all those bills that they have to deal with so that their families are comfortable.
Yeah, I think one of the other benefits that we can look at too is I think a lot of people may have noticed on April 9th that they may have gotten extra funds in their bank accounts.
Mm-hmm.
They have direct deposit. That relates to the GST credit. So the GST credit was just announced, and essentially if you originally qualified prior to, you would have received the GST credit for $400 or however much, depending on if you're single or have a family. You actually now get an enhanced amount for the 2020 year. You would have received basically what you would have normally received, but times 2 for the full year. So you'll still get all those GST credits you're going to get month to month, but there is now a one-time top-up that you would have received on April 9th. Now, for people who might be asking, well, I normally qualify, but I didn't get it, the question might become, have you filed your 2018 taxes?
That's a great point. A lot of people don't understand that most of these benefits, the GST benefits, the child tax benefits, are based on the filing of the previous year's tax returns. So if you haven't filed your personal tax returns, a lot of these benefits you won't be eligible for. Further, if you don't have automatic deposit, the check is in the mail.
Yeah, definitely. There's actually a couple questions here about the CERB that might be great to talk about. That says here, so I've heard some folk who have applied for CERB and received 2 checks. Others have only received 1 check. What to do to ensure that the funds are received? Apparently, sometimes they were prepaying for April to May.
Yeah, so great question. I don't know why the government, the CRA is doing this. Presumably there's a glitch in their system. They create this in really short order. So there might be some glitches. What I'd say to you is keep the money, send a note to CRA, either call them up, put it on record, say you've got 2 payments. Most likely, they're not going to ask you to mail the check back in. Deposit the check. Note that you most likely will not get the funds for the next period. And if you do, there's going to be some sort of reconciliation by the government when all this is done, and you're going to be taxed on it. I think the important thing to note is inform CRA about it. That way it's on their system, so they can't say you've been abusive or trying to take more than what you ought to have taken. and those harsh penalties won't be applied. So inform CRA if you got 2 checks. Continue to fill out the CERB reporting every 4 weeks, and deposit the money. And I'm sure sometime late this year or early 2021, they will reconcile these amounts and expect to have to pay tax on it come April 2021 for the 2020 personal tax year. One other thing I want to talk to you about the CERB from the business owner perspective. Those business owners that were taking dividends in 2019 and qualified and are drawing money from their companies right now. A lot of the questions are, can they qualify for the CERB? Is that considered income? Well, technically, what you're doing is you're taking a loan or you're taking capital from your corporation. So it's not considered income. If your corporation is earning income, but you've chosen not to take a wage because you want to pay your employees, cover your expenses, ensure the corporation is a viable entity, you still qualify for the CERB. So if you're not earning any income, then you certainly can apply for the CERB and take the CERB.
John, do you have any thoughts on how they might go and take a look at that once the dust all settles with the income that you received from it, like say a T5 or dividend?
We don't have any rules on that yet, but general corporate law would say that if a dividend is declared December 31st, that's income as of December 31st, if, for example, you're on a calendar year end inside your corporation. So right now, I think you're going to be fine. And once again, if it's gray, it's better to be on the safe side than taking the risky side, because quite frankly, the intent of all this is to make sure people have enough funds to pay for their family and themselves. So as long as we're not being abusive, as long as we're not trying to undermine the system, we should be fine. And more rules will come out, and if things change, then it's just a matter of not taking it or informing CRA that you received it. And right now, that's good enough to be deemed not to be abusive.
I think one thing that I don't think we've touched on quite yet is like the tax deadlines have all changed. Do you like what kind of tax deadlines are we looking at for this year?
Yeah, everything has changed. That's right. For personal taxes, the deadline is now June 1st. For corporations who had reporting periods from anytime from March 18th to June 1st, all been pushed back to June 1st, and any amounts owing aren't due till September 1. So August 31st, 2020 is your last day of not having to pay any interest before your funds are due on September 1, 2020.
Yeah, and I think one of the things that I think is good to know too is the balances are not due until September 1 or whatever the date may be, but it's not to say you shouldn't be filing. So for a corporation, the filing deadlines haven't necessarily changed. It's just the balances become due September 1st. So I think that's a big important distinction, right?
That's great. And this doesn't, and of course, one of the things that CRA did mention, it doesn't apply to payroll. So even if you say couldn't pay the remittances, you still have to file your payroll. You still have to file your GST numbers. Those failure to file penalties are still there for those accounts. You just don't have to pay the amounts. And I think that's actually really important, because I think the government needs to know what's happening in the economy. And one of their quickest indicators is what our corporations' GST filings look like, because that's going to show the huge decrease in revenues at a macro level throughout the economy.
Yeah, definitely. Maybe we'll take some questions.
Sure. And there's a lot of questions about the CERB. One of the things that I just saw in the chat box, and I know I've gotten a lot of questions about that, is what happens if I'm making a little bit of money? Well, the CERB right now is very specific. If you earn any income through any sources, you disqualify for the CERB. It's not there to top up. It's either an all or nothing. We think that's going to change. We think there'll be some amendments. It might even come tomorrow when Parliament sits. But currently, any income disqualifies you for the CERB.
Oh, this is a good one. Does rental income count?
Yes, it is a form. If you are earning rental income personally, it's a form of income and it will count. Now, the question is, and this is where, us tax accountants, we can pick at the verbiage, right? If it's a rental loss and not rental income, then presumably you're okay. So they didn't use the term revenue. So in a case like this individual has mentioned, if your rental revenue is $500 and using normal accounting procedures, you're going to earn a loss in that period. You don't have income. Now that might be skirting some of the rules, so I would encourage you to call me up, and I'll certainly make a call to CRA on Monday about that. But my sense is if you're in a rental loss position, in the spirit of the law, you need money to survive. You might be okay, but it is certainly a gray area on that piece. If it's rental income, it's not gray. If it's a rental loss, then I think you're going to be okay. But we'll call up CRA and get back to you on that.
Yeah, so the last question here says, can I qualify for the CERB? I'm self-employed in arts and entertainment industry. So the CERB actually applies, just like we talked about, to any income, as long as you have not had income. You have not had income for the periods that you are applying for. You do not expect to earn any. So you are self-employed. So if you haven't been able to get any work for these periods, you would qualify for the CERB.
Yeah, like Mr. Trudeau has said, if you're not earning income and it's because of COVID-19, the CERB is open to you. So I would encourage you to apply. I've heard it's 2 or 3 questions. It takes a matter of 5 minutes, and it's in your account within days. So certainly apply. If the rules change, if more clarification is released in the subsequent weeks, and you determine that you shouldn't have applied for it, not a problem, right? We'll just inform CRA that you got it. You'll get a slip at the end of the year, and you'll report it as income. As long as you're not being abusive, you will be fine. I think the key here, Eric, is that everyone has a full belly, that you have money, so you can buy food and you can weather the storm, so to speak. So if there's any doubt and you're not earning any income, apply.
Yeah, definitely. I mean, and before we jump into any more questions, I think I'd just like to note that a lot of this information that we have today and that we shared, we actually have on our website that is available for you to read through. I know it's a lot to digest in this hour-long conversation, but it's good to at least be able to read it. I know not everybody is great with just listening. So if you just go to our resource page on our website, you'll be able to see a lot of the legislation that comes out. We update it quite frequently as things are coming out.
Yeah, absolutely. In fact, we just uploaded some stuff this morning about specifically what we're talking about. We uploaded 2 documents. The second document is an annex, and it just quickly summarizes all of the programs at a very high level. And the second document gets into the details of each one of the programs.
So one of the questions we have here: are CERB and EI mutually exclusive? Can people collect both?
Yeah, certainly. Great question. The short answer is no. The long answer is if you were on EI, the system was supposed to automatically, if you were on EI and you're getting less than the $2,000 CERB benefit, when the CERB became live on Monday, they were supposed to bump up your EI so that you had a minimum threshold of $2,000. So that should have happened. If it hasn't, let's get on the horn with CRA, with Employment Canada, and get that bumped up. But you can't collect both. And if you're on EI prior to March 18th, and when it runs out in the fall or whenever it runs out, you can then subsequently go on the CERB. So you don't lose the opportunity to be on the CERB. You just delay when you can take it. The goal is that every Canadian has a minimum of $2,000 of income each month to get through the storm.
So my wife is a self-employed hairdresser, and her T4 for 2019 was under 5K. Would you still recommend her apply for CERB, or will she just be declined?
That's a tough question. The rules say that you had to have employment income in 2019 of $5,000, or you lost your job in 2020 because of COVID-19. So my argument, my logic there is that if your wife is unable to cut hair today because of COVID-19, she applies for the CERB. So the answer is yes. she should apply for the CERB because her income in 2020 has disappeared, vanished because of the restrictions that government has imposed on people that you can't go see a hairdresser. So answer is yes. So it's $5,000 in 2019, or you've lost your job because of CERB in 2020. So presumably she was working in 2020 up till March 18th or something like that, and now she can no longer work, and therefore she should get the CERB.
Yeah, definitely. So
we actually have a question. We have a comment from one of our partners in our Sherwood Park office, Preet Sandhu. What do you have to comment on, Preet?
Yeah, I just wanted to add to that. So they say 5,000 in 2019 or the last 12 months. So you might be able to get that 5,000 limit if you use some of 2020 and the later part of 2019. It just has to be 5,000 in the last 12 months as well. So that's another qualification.
yeah, that's a great point. So basically, I guess to cap it all off, if she still worked in the first 2 months of 2020, and like she has a frame of time that gets her over 5,000 in the last 12 months, then she would qualify for CERB. Thanks, Preet.
I see a question in the chat box about do I have to remit our payroll for April? So you should, if you have the funds to remit. If you don't, you certainly have to file your remittance forms. And if you can't pay all of it, there'll be no interest. But you do have to file the forms. You do have to show that you had wages, and that will certainly tie into the 75% wage subsidy that you're going to get in presumably 6 weeks from now, 3 weeks from now. The program should open up, and then payments should come 3 weeks after that. So yes, file your T4 summaries for the month. If you can't pay it all, interest will not accrue on that. So you'll owe it still. It's not forgiven, but you won't incur interest. And presumably when you get the 75% back, based on your cash flow needs, you can maybe pay that off, pay a portion of it off, use the rest of the cash to keep the business going, or pay employees in the subsequent period.
Yeah, so it looks like we've kind of settled down with the questions. I think one thing we haven't quite commented too much on is all of these business credit availability programs that are starting to come out. Like, BDC is offering some loans and stuff like that. What are your thoughts on how a corporation might use this stuff? What do you think is a strategy here?
Yeah, I've gotten a lot of emails about should I take the loans out. Well, the money isn't free, and there's certainly interest tied to that. But in times like this, get the money and use it to keep your business going for sure. So if you're eligible for any of the loans at your banks, and most of these, I know there's up to 6.25 million loans available under both BDC and Export Development Canada. I would say apply with your banks for mortgage and interest deferral on any properties you own inside your corporation or personally. Protect the cash, and then use that cash to prepare the business for the next phase, right? Which is going to be the rebuild phase. I've had a lot of conversations with clients that aren't working today, that their businesses are shut down. In that, what's my strategy for marketing coming out of this? And I'm saying, you're going to grow again. You're going to have funds available for marketing, for restarting all those business procedures that you've shut down. So yes, get the funds for sure.
Question here, just to clarify, if my business's T4 income is in excess of $1 million, I am ineligible for the $40,000 CEBA. That's the $40,000 loan with the forgiveness. Yeah, that's correct. If your T4 summary shows employment income over 1 million, you would not be eligible for that program.
That's correct. And now a lot of our clients will have several operating companies. So if you had a smaller operating company that had T4 income that was within that 50,000 to $1 million, would it qualify?
I believe so. That would be it. It is
yes.
Per employer.
Yeah, absolutely. So if you had one of those big organizational web charts and you had several operating companies, each operating company or each company, I don't want to use the word operating Each company that has T4 income would or paid T4 wages would be eligible for the CEBA if it fits within that bracket.
Yeah.
Okay, well, I think the questions have slowed down. And as we say goodbye, maybe Eric, one last check on the chat. And I just want to summarize what we've been talking about and what we've seen in the last 2 weeks with our clients. The first thing is, it's hard to make some of these decisions from a strategic or business operation perspective. You've got to think mid to long term, set your corporation up for success coming out of this. Right now, we're really kind of looking close to our face and looking at the punches that we're receiving from a business context. I'd encourage you to step back over this long weekend and think about, what does success look like in the midterm, 6 to 9 months, and what does it look like in 24 to 36 months, and change your business or conduct things accordingly today that's going to put you in the best position in the mid to long term, because those are the ones that will survive. It's not about egos anymore. It's about doing things right now so that this time next year you still have a company and you're employing people and the economy's coming back together. So those are tough decisions. Feel free to give me a shout. I answer my phone all the time. We want to make sure that business is good to go for all of us, next 2 or 3 years for sure. Mentally, I'm looking past the next 6 weeks and then saying, let's make decisions for the next 6 months, next 2 years. 2, from a personal perspective, take the position, I think, Eric, that don't be abusive, but if you need the funds and you fit the criteria, even in an expanded imagination, it's probably the right thing to do. Give us a call. We'll make sure you're covered from that perspective, and take care of your families.
Yeah, definitely, for sure. I think there's one question that I think we might have missed, but I believe we touched on it, but I want to make sure that everybody has some, security. Somebody had asked whether or not the 10% temporary wage subsidy rolls into the 75% at all, or how that works. It's not that the 10% would disappear. They're technically different programs. It's just, if you currently applied for the 10% and you receive it, once the 75% is all set up in a 3-week time, it will be kind of like your 75% amount will be reduced by the amount you received on the 10%.
That's great. You use the word received. It's not received on the 10%. It's, you don't have to remit to CRA. So you just reduce the amount of remittances you have to send to the government. And then when you receive the 75% wage subsidy, it is reduced by the amount that you did not send to CRA. Yeah, absolutely correct.
Yeah.
Okay, well, next week we're gonna have another coffee chat, a Friday coffee chat. If you have any questions or anything that you want to us to explain, send us an email, www.gallonco.ca. Our emails are there, and we'll be sure to address that next week. And of course, address what's going to happen tomorrow in Parliament and next week with whatever benefits or business issues that are upcoming next week. Have a great Easter. Have a safe weekend. Enjoy your families, and together we're going to get through this.
All right. See you guys later.